You know, every investor call really has two parts. First, you get the polished, prepared script, and then you get the real conversation. Today, we're diving deep into the Hims and Hers Q3 2025 investor call. But we're skipping right past that prepared script. We're going straight to the Q&A because that's where you find out what's really going on.
I mean, think about it. The prepared speech? That's marketing. It's what they want you to hear. But the real gold is when analysts from places like Morgan Stanley and KeyBank start asking the tough questions. That's when you see what the real priorities are, where the weak spots might be, and what the true vision for the future actually looks like. And that's exactly what we're going to uncover.
So how are we going to do this? Well, we're not just going to hit play and listen to the call. No, we're going to untangle it. We're going to look at the key themes, the ideas and questions that investors kept coming back to again and again, and piece together the Hims and Hers playbook for the next few years.
Here's how we'll break it down. First, we'll get a sense of what was top of mind for the analysts. Then we'll dive into their massive new bet on longevity. After that, we'll look at how they plan to pay for it all by supercharging their core Hims and Hers brands. Then we'll get into their global ambitions, and finally, we'll wrap it all up with their investment strategy and what it all means for the big picture.
Okay, so let's dive right in. What were the big questions? By looking at the themes that kept popping up, we can really start to see the outline of where this company is headed.
The first theme, and honestly, the most exciting one, was this huge, ambitious push away from just treating sickness and towards proactively managing health. We're talking longevity and diagnostics. This is a whole new ballgame.
And you could tell the interest here was off the charts. The very first question wasn't even from a Wall Street analyst. It was from a retail investor asking for a timeline on a full-stack longevity service. That tells you this is what everyone wants to know. And the company's answer? Well, they laid out a very specific roadmap. CEO Andrew Dudum didn't miss a beat. He laid out this super clear three-step plan. It kicks off with comprehensive lab testing before the end of this year. Then, in 2026, the full-blown longevity service goes live. And the final piece of the puzzle is integrating all these advanced treatments, things like peptides and GLP-1s, so they can actually act on all the data they're collecting.
But here's the kicker. This isn't just about adding a new service. This is their play to totally disrupt the market. Dudum pointed out that these kinds of comprehensive tests can cost $5,000, even $10,000. By offering them for, in his words, an absolute fraction of that cost, he's basically announcing a plan to make proactive healthcare accessible to, well, everyone. Okay, but all this futuristic investment costs a ton of money, right? So where's it all coming from? Let's move on and see what the Q&A told us about how they're planning to fuel this vision by strengthening their core Hims and Hers brands.
As analysts started digging into the core business, one number just jumped off the page. $1 billion.
And get this, that's the revenue they expect from the Hers brand alone by 2026. When an analyst from Morgan Stanley pushed them on this, it became really clear this isn't just some pie-in-the-sky number. It's being driven by a seriously powerful and diverse growth engine.
And the growth isn't a one-trick pony. Dudum rattled off a whole list of drivers: dermatology, weight loss, both oral and GLP-1s, and a huge new push into menopause support. But what's really crucial is that they see the new longevity and diagnostics platform as a key driver for the Hers customer base specifically.
Now on the Hims side of the business, the Q&A brought out this fascinating pivot. They're strategically moving away from just being a place for one-off treatments. The new focus is on personalized, daily regimens that can manage multiple conditions all at once. With new offerings like testosterone support, the goal is pretty obvious. Increase retention, keep customers around for longer, and drive much stronger, more predictable growth.
So, they've got a vision for new products and a solid plan for their core business. But how do you scale all of that? Well, that brings us to the third major theme from the Q&A, their playbook for marketing and global expansion. An analyst from KeyBank hit on a really critical point here. With all these new services, how does your marketing have to change? And this wasn't just a question about spending more on ads. It was about a fundamental shift in the company's entire brand identity.
And Dudum's answer was so revealing. He explained that their early marketing for things like hair loss or sexual health had to be private and direct because of the stigma. But things like wellness and longevity, those are totally different. They're shareable. People talk about them. And that just unlocks this much broader, more powerful way for them to build their brand out in the open.
And they're planning to take that new brand message worldwide. When asked about their international plans, the strategy was crystal clear.
They're using their Zava acquisition to push across Europe, they're getting ready to launch in Canada very soon, and they're already looking ahead at huge markets like Brazil and Australia.
A bigger product lineup and a global footprint, well, that takes some serious cash. And that led to a really critical line of questioning from analysts about capital, spending, and of course, profitability.
So where's the money actually going? The Q&A broke it down into 5 key areas: building out their own facilities for better control, launching all these new specialties, upgrading their tech, expanding internationally, and making smart, strategic partnerships, like their deal with the cancer detection company Grail.
Of course, when investors hear spending, they immediately think, what about profits? The CFO, Yemi Okupe, was incredibly direct about it. He told them flat out to expect a temporary pause in margin growth. For any investor, that's a huge piece of information for understanding what to expect in the short term.
But right after that, Okupe gave the most important context. He basically said, hey, we've seen this movie before. He framed this spending as a replay of their past strategy. You lean in, you invest heavily for a couple of quarters, and then you see rapid margin growth on the other side. The message was loud and clear. Trust us, this is a proven playbook.
All right, so let's pull all these pieces together. When you step back and look at everything we just heard in that Q&A, what's the one big story? It's a story of a company right in the middle of a massive strategic evolution.
You can literally see their journey laid out. Back in 2017, they started out just treating simple, specific problems. By 2022, they had evolved to providing personalized care for multiple conditions at once. And now, what this Q&A made clear is that their ambition for 2026 is to get ahead of problems entirely, to proactively manage a person's whole health journey from start to finish.
And that leads us to the final, crucial question that hangs over everything. The Q&A laid out an incredibly bold and ambitious vision. The strategy is there, the money is being invested, but the ultimate test is going to be whether they can actually make that giant leap, from being a go-to for specific treatments to becoming a holistic, proactive health partner for millions of people all over the world. The answer to that is going to define their entire future.